Why is the Indian stock market crashing? The Indian stock market is in crisis. The Sensex has crashed by over 1,000 points in a single day. Investors have lost more than 5 lakh crore in just a few sessions. Foreign investors are pulling out money, IT and banking stocks are in freefall, and global uncertainties are making things worse. But why is this happening? Is this just a temporary correction, or are we heading toward a bigger financial disaster? Stay with me till the end as we break down the exact reasons behind this crash and what it means for your investments. What just happened? The BSE Sensex and Nifty 50 have been seeing sharp declines, with Sensex dropping from over 73,000 to around 71,000 in just a few sessions. But what's really causing this sudden crash? Let's break it down into 5 key reasons that are pulling the Indian stock market down. 1. Foreign investors are pulling out in huge numbers. Foreign institutional investors have been aggressively selling Indian stocks. In just 2 months, January and February 2025, FIIs pulled out over 1.1 lakh crore from Indian equities. Where is this money going? To the US. The US Federal Reserve has kept interest rates high, making US bonds more attractive. As a result, FIIs are shifting money from India to the US, leading to massive selling in Indian stocks. 2. Global trade tensions and US economic slowdown. US President Donald Trump has announced a 25% tariff on imports from Canada and Mexico, raising fears of a global trade war. A slowdown in the US economy is making global investors more cautious, reducing investments in emerging markets like India. Whenever global uncertainty increases, Indian markets get hit hard because FIIs start pulling out their money. IT and banking stocks are falling hard. The Nifty IT index has dropped by over 2.2%, with stocks like Infosys, TCS, and Wipro seeing heavy losses. Why? Weak demand from US and European clients is affecting India's IT sector. Banking stocks are also in trouble. HDFC Bank, ICICI Bank, and SBI have fallen as weak earnings and rising NPAs, bad loans, create concerns. Banks are major market movers, so when they fall, the entire market drops. 4. Domestic economic concerns. India's GDP growth is showing signs of slowing down, making investors nervous. Inflation is still high, and the RBI is unlikely to cut interest rates soon, making borrowing expensive for businesses. Lower corporate earnings weaken market sentiment, leading to falling stock prices. 5. Indian market was overvalued. Before this crash, Indian stocks were trading at very high valuations compared to other markets. In January 2025, Nifty 50 had a PE ratio of nearly 24, which is historically high. Global investment firms like HSBC downgraded Indian stocks, warning that the market was too expensive. Now, we are seeing a natural correction as stocks return to more realistic valuations. What next? Will the market recover? Now, the big question, is this just a correction, or will the market fall even further? Experts have mixed opinions. Some believe that this is a short-term correction and that smart investors should buy quality stocks at lower prices. Others warn that global uncertainties could push the market lower, and we may see Sensex drop below 70,000. What should you do as an investor? Let's discuss some smart strategies. Panic and avoid emotional selling. Market corrections are normal and happen every few years. Selling in fear often leads to losses, while long-term investors benefit from dips. 2. Focus on quality stocks. Look for fundamentally strong companies that can survive market volatility. Stocks in sectors like pharma, FMCG, and energy chushi tend to perform better during downturns. 3. Keep some cash ready. If the market drops further, having cash gives you the power to buy at lower prices. Warren Buffett once said, "Be fearful when others are greedy, and greedy when others are fearful." Conclusions are: the stock market is unpredictable, but smart investors always think long-term. What do you think? Will the Sensex recover soon, or is this just the beginning of a bigger crash? Comment below and share your thoughts. If you found this analysis useful, make sure to like, share, and subscribe to the Profitarium for more expert insights on finance and investing.